Welcome back, everyone. Welcome back to the Keep It Simple Investing Week Review. This was an absolutely lunatic, crazy week. And we're going to review everything that happened today and this week. In this video, we're going to talk about the major indices, both year to date and week to date. We're going to talk about the FAANGs and the crazy move that Apple had. We're going to talk about the anti-bubble positions and the crazy move that silver had this week and last week. And because I don't want to make this video very long, I'm going to do our trade of the week in a following video, which I will post right after this one. And if you like what you see, I would love it if you could just click like and subscribe and maybe the little bell. That helps me out a lot. And let's get to it. Let's start with our weekend review with the major indices. Take a look at this. These are the year-to-date performance of the four major indices. The NASDAQ keeps going up. Just take a look at this line, how it goes up like crazy. And it's up already 27.5% for the year. The S&P finally broke out, and now it's almost 4% for the year. And the Dow and the Russell are still in negative territory. The Russell being down 5% for the year. Now let's see what happened this week. This week, as you can see, here's our zero line. Nobody had a bad week. Actually, the Russell had a crazy week. It went up 6%. And I am personally itching to short the Russell. Probably if we get a relief from the stimulus package. I'm just waiting for the Congress to act, and then I would like to place my short bets. The Dow Industrial Average had almost a 4% week. The S&P 2.5%, and the NASDAQ, you could say, had a terrible week, only up 2%. We are living in crazy town. Everything is up. A good jobs number, market goes up. A terrible jobs number, the market goes up. And no improvement in the jobs number like today, and the market still goes up. The dollar also had an up week, and we still managed to go up. Now, let's take a look at the FAANGs. FAANGs reported better than expected earnings. And let me tell you something about the old wall. They are never going to say that the earnings are terrible. Actually, the S&P 500 companies have reported year-over-year basis a decrease of 57% on their earnings. Yes, 57%. But when you turn on CNBC or any financial channel, they're always going to say, hey, earnings were better than expected, which you know what game they're playing. They're playing an asset game because they make money by keeping customer assets in their accounts. But let's take a look at the main avenue of Crazy Town. Apple went up 15% for the week. Yes, 15%. It's up 50% for the year, 5-1. Yeah, it's absolutely lunacy. And it's almost hitting $2 trillion in valuation. Actually, the companies that you see up here are worth more than the GDP of all the countries on planet Earth, with the exception of the USA and China. So it's really, truly amazing to see a $2 trillion company have a 15% up move. And Facebook also reported huge numbers. And I guess that advertising boycott didn't hurt them at all. You know why it didn't hurt them? Because people don't have anywhere to go. You either advertise on Facebook or you advertise on Google. People have nowhere to go. And Amazon had a terrible week. They were only up 4% after reporting blowout earnings, but Amazon is only up 71% for the year. Tesla, as we can see, has cooled off a bit. it hasn't moved a lot in the last 2 weeks. It's only up 247% for the year. And so I guess Elon Musk is having a good year. Now let's take a look at the major sectors on the stock market. If you remember, last week silver had a 19% up week, and this week had another 20% week. So silver is now up 57% for the year, which is absolutely amazing. Gold, which is very strong, has only had a 33%, it's up for the year. And Bitcoin, which some people consider a currency, I considered it more as a commodity, is up 60% for the year. And so you see there's no risk here. There's no inflation. There's no inflation, but all the commodities are going up. Now let's take a look at the sectors inside the S&P 500. Winner, winner, chicken dinner. Why? Because everything is green. Everything is green. And once again, technology, XLK, was the leader, and it's up 24% for the year. Very similar to the percentage that the NASDAQ is up. And no surprise there, because the XLK is made up of mainly technology companies that trade in the NASDAQ. Now let's take a look at our anti-bubble positions. We've been covering these positions now for almost 2 months, and I hope you guys are invested with us in these positions. Gold is still working. Gold miners working very well. XLU had another solid week, and tips are also had a up week. If there was no inflation, tips will not be 8% up for the year. This is where the Fed, I think, is losing credibility, because all the inflation-related indices are signaling huge inflation. And so unless we see the dollar tick up next week, which today actually the dollar tried to tick up a little bit, and you saw what happened to gold. The dollar had a miniature uptick, and gold was already going down hard. So keep an eye on the US dollar and keep an eye on interest rates. If interest rates start going up and the US dollar starts strengthening a little bit, it's time to take some profits on our commodities and our tip position, and wait for the dip. I do want you to buy the dip, but I do want you to buy the dip on commodities, on gold, on tips, etc. Now, for the trade of the week, I want to do something different. I want to do a separate video. I want to teach you guys today a risk reversal, and I will post that video immediately after posting this one. So thank you very much for spending some of your weekend with me. I hope you enjoy these weekly reviews. They're very important to know what's going on in the market. Remember, we don't know where we're going if we don't know where we have been. And remember, you gotta risk it to get the biscuit. Good luck trading, guys.